Hello, future chartered accountant. You're welcome back to my channel. Welcome to Synopsis of ICAN. On this channel, I'll teach you all you need to succeed and ace any ICAN examination. Today, I'll be teaching you case study. But before we go into today's lesson and today's class, please, if you have not subscribed, kindly hit the subscribe button. To my returning subscribers, thank you so much for always stopping by. Please don't forget to like this video, share this video all around, comment, and also turn on the notification bell so that you get updates of my new videos. So what are we doing today? Today is our practical class. So in my subsequent videos, I was able to teach you. We discussed cover page, we discussed executive summary, we've talked about financial data analysis, financial statement analysis, appendices. We've talked about a whole lot. If you are new here, don't worry. You are not left behind. Just ensure you go to those videos, you watch it and catch up with the class, all right? So today I'm going to show you a holistic view. I'm going to be giving you how the whole case study report looks like, because we have been discussing them in bits. So, okay, how do we now merge all these things we have discussed into one report, right? So that's what we're going to be doing today. And now, in our previous classes, we have been using November 2019 to explain. We'll be using it to have looked at the cover page, we have looked at executive summary, we've looked at financial data analysis, financial statement analysis. So I want you to see how it all comes together. I want to join everything together and show you how it will look when you are actually writing your case study examination, how you should arrange it in that sense. So that's what we're going to be doing in today's video, in today's class. So, briefly, I just want us to look at the question, the November 2019 question a bit. So, this is November 2019 on the screen here. So, we're told, oh, you have 4 hours of reading time. We have talked about how smart ways to manage your time. If you have not watched that video, you can just check my channel, it is there. Then, I just want us to I want to point out some things here so that we can go into the calculation. So we're told that you are given a list of exhibits, and you were told you were given information about you. Now, this is very, very important because this will help us when we're doing our cover page. Sorry, this will help us when we're doing our cover page, right? Because in our videos, I explained that the cover page you prepare will depend on whether you're writing an external report or you're writing an internal report, right? Now, about you, Chukura Ali, and your employer, Oluwole Ibrahim, is a fair and co-chartered accountant. That you are working for Oluwole, right? But now you were given information about Detroit Farm and Farm Products. You were given information about their business opportunities, their management accounts. So you can see that there's a presence of a third party, right? Somebody other than the company you're working for, a company other than the company you're working for, right? So that shows that's a sign that we are preparing an external report, and which also implies that when we are doing our cover page, we will need a what? We will need a disclaimer, right? So that's that on the cover page. So let's look at other information that we're given. This one was just information about you, your responsibilities. Then you were given information about the agri business as well, because Detroit Farm and Farm Products is an agricultural company, right? That farm and farm products obviously is agri. So that's why you're giving challenges, you're giving the opportunities. So all that to just help us when we're doing our explanation, right? We're giving history about Detroit and Detroit farms, the board, the a lot of information, basically a lot of information, and you're also giving these business opportunities. Now we're told the retail shop, right, that this was information with a retail contract with the shop. So the shop is like the company you are working with. The shop is a retail meal kitchen and for the middle class and high class. So they're not telling, sorry, retail mall kitchen rather. So they're not telling us about the shop, okay, what they do, and the shop has contacted Detroit Farms through his marketing department for a business relationship. The shop is willing to enter into a long-term contract with Detroit Farms for constant supply of farm fresh products such as meat, poultry, fish, and vegetables to its various shops, right? So they're just trying to give us information that, oh, the shop, a company, a retail mall catering service, right, that provides services for middle class and high class. They contacted Detroit Farms. Now, take a look at this. You're working for Oluwole Abi Ezeife and Co. And Detroit Farm is your client. Ditoy Farm is now telling you about his current business opportunities. So Ditoy Farm is our client, not the shop. Let's get that straight. Ditoy Farm is our client. Our client approached us and is giving us information about his current business opportunities, right? Now, one of the opportunities or one of the contracts they're considering is a retail contract with the shop. That's the contract they're considering, a retail contract with the shop. That's the name of the company, right? So they're just telling us about it. That they contacted us. They want us to supply them some products, some of our farm products. If Detoy Farm accepts the contract, it will necessitate Detoy Farm installing an integrated meat processing plant on the farm to be able to meet the specification of the shop. So they're just trying to let us know that, okay, now there are two business opportunities. The first one is the retail contract with the shop. The second one is what? Installing an integrated meat processing plant, right? And they made us to understand that if we accept the contract with the shop, we will need to we will need to install rather an integrated meat processing plant. And probably because they're asking for meat, they're asking for poultry, fish, vegetables, and obviously they're asking for meat. So probably we'll have to process our meat. I know plants is basically like a factory, right? Like you understand? So they have to install an integrated meat processing plant. A plant that'll be able to process the meat for us. So that means the first contract, accepting the first contract would require us to open up another contract in that sense, or accepting this contract. That means the contract, the future of the contract or the success of the contract is dependent on we installing a meat processing plant, because we will need it to actually fulfill to contract one and contract two are depending on each other, basically. So now, in view of the various inquiries, now look at this now. In view of the various inquiries, Digital Farm has been receiving from its customers. The board is currently considering the installation of the integrated meat processing plant on the farm. The plant will be capable of processing meat from the cattle to poultry, right? It's comprised of slaughtering slabs, the skinning, the feathering, to package. So they're just telling us everything that to contain. So basically, the information that we just need there basically is that project one will require project two. So they gave us management account. So that information will help us in our interpretation, help us in our decision making, right? So we're giving management accounts from 2017 to 2018. We're giving all the information. The notes to the account was also given. Then we're giving exhibits from press release, all this information. We're also giving that. Then that was all about the unseen. Now, in the pre-scene, we're also giving some list of exhibits as well, and those exhibits are what will help us. Sorry, those exhibits. So we're giving management accounts for the year 2018. They included this as well. Then email from Tom Adirogba, the shop, email on the shop contract. We're also giving more information about the shop contract and information about the process. The proposed installation of integrated meat processing plant. So we're giving all that information. Now to the requirements. Now remember you're looking for Oluwole is a fair be now. So email from James Oluwole to Chukura Ali. So you're giving, I know you are Chukura Ali in this place. So email that was sent to you about Ditoy and Ditoy Farm Products. Farm Products Limited. So you were asked to draft a report addressed to the board of DFP. So this is another way to also know if you are preparing an external report. You are asked to prepare a report for DFPP. DFPP is Detoy Farm and Farm Products, right? And the report should comprise of number one, a review of the management account for the year ended 30th September 2019 as presented in Exhibit 9. Your review should contain analysis of revenue, costs, and overheads across these revenue streams in comparison with the previous 2 years. You should evaluate the impact of these changes on DFFP's operating profits. In addition, please comment on the reasons for the bank overdraft. So basically, all this information, where are we going to get it from? The financial statement, right? That's good. And just like we discussed in our financial statement analysis class, we discussed that if you are asked to carry out, like, if one of the requirements involves things that you will need information from the financial statements to actually fulfill that requirement, right? Then you are doing a what? You're doing a financial statement analysis. So basically, number one is the financial statement analysis, because if you look at it, we're asked to analyze revenue, cost, we're asked to talk about overheads, we're asked to talk about operating profits, we're asked to talk about bank overdrafts, and all of this will be found in the what? It will be found in the financial statement. So basically, that is a what? Financial statement analysis. The second one was what? An assessment of the contract supply service in Exhibits 10 and 11. We also require to critically evaluate the proposed strategic business opportunity, the installation of meat processing plants by DFFP as contained in Exhibit 12, and discuss broader commercial and ethical considerations as well as risk may be associated with accepting or venturing into these business proposals. So, just like we discussed in our financial data analysis class, information as regards contracts, information as regards proposed business, information as regards accepting a contract or a project or anything like that, it's a what? It will require a what? A financial data analysis. So, in summary, requirement one is a financial statement analysis, and requirement two is a financial data analysis. So that's what we're going to be working with. And aside that, we're also giving extra information. We're giving information about the shop. You can see this information. Okay, this was information about this one and this toy farm product. I mean now, or we are giving information. Oh, they just received a proposal from the shop, and then they will actually the proposal would require installation of an integrated meat processing plant and all of it. So they're giving us all that information, right? And just like they said, they're going to give us in Exhibit 9, they give us additional information for 2019, the financial statement. You can see that, right? You can see that here, right? For the year ended 2019. So we're giving information as well. So moving on, we're also giving information on the shop. We're giving information about the contract terms, and finally, we're giving information about the installation of the integrated meat processing plant. And if you look at this information, we have costs, we have working capital, we have revenue, which you go each estimated revenue and probability, which implies that we'll be getting a what? An expected revenue, right? Because estimated revenue multiplied by probability will give us a what? Will give us our expected revenue. I mean, now from your performance management and all that, you must have learned that, right? So your cost of capital is 15% per annum, and we're given a scrap value and the number of years of 5 years. So all these points at what? Net present value. So because net present value, we need an outflow, we have the cost, we need an inflow, we have the revenue, we need the cost of capital, which was given at 15%, and we need years, which was given as 5. And even in this, they gave us additional information as regards the working capital and also the scrap value. So we basically have everything that we need in this question. So now let's go to the practical class. All right, so let's start practice. Let's start the practice. Please don't leave. We are going to solve this question. All right. So let's just go to the practical class now. Yes, so let's continue now. Let's start the practical class. So we have analyzed the question, we've gone through the question, we're able to see what was required of us and the information that we'll be needing, right? So now let's go. So the first thing, like I explained in our previous classes, is that your page one is your cover page. So this is the structure of your cover page. You have the two. Now you're preparing the reports for. Remember when we said when we read our question that we're told that we should address the report to the board of directors of DFPP, right? So now you have your two. The first one is the two, right? The board of directors of Detoy Farms and Farm Products. Detoy Farm and Farm Products. I think it's Farms and Farm Products, yes. Then you have title, the report on the evaluation. Now, I was explaining in the previous classes that you should draft a title as per the requirement, based on the requirement, right? So we're asked to evaluate the management account, and we're also asked to evaluate the contract supply service from the shop and the installation of the meat processing plant. So you don't have to make it look all bulky and all lengthy. Just your summarization skills, right, has to be top notch, like I always say. So you have to like look for a way to merge the two requirements together and bring a topic together. So don't formulate a topic on your own. Please let the topic be as per the requirements. And this title, sorry, the title, I said topic rather, I meant the title. Now, this title, I coined it from the two requirements. So we have the report on the evaluation of the management account, contract supply service, and installation of the integrated meat processing plant. Then you have you're prepared by Oluwole Abina Ibrahim is a fair and co. That's the company you're working for. Then you have your date. I just put a particular date. Okay. October 4th, 2023. It could be your examination dates. When we're addressing in previous classes, we talked about dates, right? Please, if you have not watched previous videos, please watch previous videos because my YouTube channel is like I keep teaching. It's like we're building foundation and then we're building on top of the foundation, we're building a house and we're getting to the roof, right? So please watch all the videos. Watch all the videos. Don't just come and just select. It's going to help you because we have built a step. Now we didn't just get here. We didn't just start doing practical class. We had explained something. So please, if you have not watched that video, please take your time out to watch those videos one by one so that you can actually understand where we are. But it's fine. Let's just continue today's class, right? You're going to get it because I'm going to try as much as possible to ensure that everybody understands. And don't forget to use the comment section. Please, if you don't understand something, you have a question or anything, please use the comment section, okay? And don't forget to subscribe and like this video if you haven't. Thank you. So let's continue. So you have your dates, right? And since no class was given to us about the dates, we cannot write our examination dates or that would just be the examination dates, right? So and you have your disclaimer because when we're analyzing the question, we saw the presence of a third party, right? That's Dito and Ditoid Farms. So obviously it's an external report. And the cover page of an external report will require a disclaimer. What is a disclaimer? How is a disclaimer? That has been addressed in previous classes. So please go through that class. So we have this report has been prepared for the board of directors of Ditoy Pharma Farms Products Limited. No liability would therefore be accepted in the event of unauthorized use by a third party. And beneath this, please write your page number. Yes, yes, and yes. Your ICAN examination answer booklet would have been pre-numbered, like automatically pre-numbered, but you still have to correctly number your page because that's one of the marks that will be awarded. So please, you still have to correctly number your page. It's part of the things you need to do. So you put now this is page one, right? Your cover page. We have page one. So this is how your cover page should look like. That's your page one. After doing that, you move down to your page two. I hope you can see this. I just want you to see how it looks like wholesome, like from the beginning of the page to the end of the page, so that you can understand what I am explaining. So you have your executive summary, right? We actually discussed this in the previous class, but I'm just showing you a holistic view. So you have your page two, and the executive summary. The first thing, Abina, you talk about the scope, right? The scope, the objectives, the methodologies that you used, and assumptions that you made, right? So you have your scope. This report provides information on the analysis carried out on the course. So I will zoom in now so that you can see clearly. But then I just wanted to show you underneath you write what page two. So let's zoom in so that we can look at this very, very well. So that's it. All right. So you have this report provides information on the analysis carried out. So we're telling them the scope, what we did, right? What we did. So we're telling them the scope of what we did. And the scope is not what you want, right? The scope is as per the requirement of the examiner. And afterwards, we talked about the methodologies that we used. Abina, we used trend analysis, we used next present value. We talk about the methodologies you used. Then I also explained that your executive summary, you can't do it heading by heading, and you might not necessarily do it heading by heading. You may decide to do it paragraph by paragraph as you wish, right? So you have something like this. But me, I just did this heading by head. I use the heading by heading method. So the first one is what? The review of the management account for 3 years up to 30th September 2019. So I explained, I said the review of management account of DFFP covered the revenue, costs, and overheads. It was discovered that the grew as revenue grew as there was a percentage change of 19% between 2019 and 2020 as compared to 2017, as compared to the 17% change that occurred in 2017. And you have to give a reason. This was due to the lucrative nature of the agricultural sector, especially in poultry farming. The account revealed the highest revenue in poultry farming. It was also discovered that, so I explained everything now. They told us that we should talk about revenue, right? So I summarized everything about revenue. They were also asked to talk about the operating profits, the gross profit, right? We spoke about that here as well. We're asked to talk about overhead. We spoke about that here as well. and the sales and administration costs and all of that, and the effects on operating profit. We spoke about that as well. Then another thing you can also include, we also asked to talk about bank overdrafts, right? So you cannot put an addition on bank overdraft. Oh, the reason bank overdraft increase, okay, is decreasing. So you can talk a little about it, right? Just include it. So this is just like a snapshot. I'm just trying to show you a structure that you can follow in your examination, because that can be very, very confusing. That's where you need. And examiners over time in the examiners comments have also complained that the common pitfalls of students is like they don't know where to structure the report. Some people put executive summary at the back. Meanwhile, executive summary should come immediately after your cover page. So it's just like a structure. So you add a bank overdraft, because they also told us to talk about bank overdraft, so you can just add it as well. Now, the next one that we talked about was the analysis of the contract supply service and installation of the meat processing plant, right? So you talk about it. The analysis of the contract supply service shows that GFFP should sign the contract, but the contract terms have to be negotiated to make it more favorable. However, the installation of the meat processing plant was evaluated using net present value, and it was discovered that the project is not viable. Therefore, DFFP should not embark on the installation. Now, you can also talk about it that, oh, the company should also consider the contract terms, because we're told that the contract supply the contract supply service from the shop is the one that actually made us to actually think about installation of meat processing plant, right? So you can talk about it as well. So just summarize everything that you want to summarize. But then is you are summarizing, so you might not really be able to say everything, but at least cover everything in that sense. So this one is just like a sample. I'm just showing you a sample of how it should look like. Don't forget. So then after that, you go to your conclusion and you summarize your conclusions. And like I was saying, when you're giving conclusion, please and please, you don't add new information. Although sometimes you see in the examiner's comments that the executive summary was marked independently of every other aspect of the report, but it's advisable to actually summarize the conclusions you had in your body of report here. And because you maybe start writing all sort of things, going off point. And okay, let's imagine now in the body of a report, you said the project is not viable, therefore it should not be accepted. And in your conclusion here, you are saying the project is viable, so it should be. And so, if I just only read the executive summary, I'll be accepting the project. But if I read the executive summary, I'm seeing accept here, I'm seeing reject here. Everything is just all wobbly. It's confusing. So please don't do that. And ensure that anything you are concluding here is based on what you have computed and what you have done in the body of your report. So that's how it is. Then let's zoom in again so that you can see. Then after that, you have your page 3. Like I said, please number your pages, even though it will have been pre-numbered. Please do that. Then so the first thing, what do we have? We had our cover page number 1. That's the first thing, your cover page. After that, you have an executive summary, and your executive summary should not be more than 2 pages, please. I know that some people like me now, we have big handwriting, but please and please manage it. Don't say you want to use 2.5 pages or 3 pages. Please, it's 2 pages. Please, it's 2 pages. And that was why I actually used font 14 at least. The standard is font 12, but I used font 14 at least to cover for large handwriting, as the case may be, right? So you can see that my executive summary now, it was on page 2 and a little of page 3, right? So please and please don't let it exceed page 2 and page 3, okay? So let's say exit page 2. And don't now do page 2. Your own executive summary is now stopping here. Like, is this so? Are you now telling me that everything you did was only from here to here? Like, imagine now you don't have this way. It's too short. So you have to strike a balance between too short and too long, because you cannot tell me that, oh, everything that you analyze, this is just the summary. Are you joking? Of course, you will not be taken seriously, because you are writing a report of over 10 pages, a report of 15. Some people can have 20 pages. And you're telling me that the summary of everything that you did, the conclusion, recommendation, everything is just half a page? So you have to strike a balance between too much and too little. That's very, very important. So that's how you have your cover page, the first thing, right? The second thing, your executive summary on page 2 and page 3. And after that, you go down to, you can write an introduction, like I said. An introduction is also good. So after your executive summary, you could have an introduction here. But I just decided not to write an introduction because introduction is not really, really important. It just helps your work, it makes your work look professional. It gives your work a professional outlook. But since this was a practical class of me just trying to show you the major things that you can write and how you can structure your report, I just left that out for this. But then in subsequent classes, you can actually look at how an introduction actually looks. Okay. So after that, you jump after you have your cover page, your executive summary, you can go to your introduction, and then you go to your what, the body of your report. Now all these we have discussed it in the financial statement analysis practical class. If you have not watched that video, ensure you watch that video, please and please and please ensure you watch that video. Okay. So you have the a little introduction of what we did. Then they told us to talk about revenue. We discussed it, and then you link your appendix one, appendix one, and don't say appendix one when it's actually in appendix two. So I'm going to be looking at the appendix shortly, but let's just do this, okay? Then you talk about cost of sales. I also linked it appendix one. Then you talk about overheads. So we actually discussed all this in the financial statement analysis class. But let me just go through it a little again. So we're told to talk about the revenue, the cost, the overheads, the profit, and the reasons for bank overdraft, right? So we actually analyzed revenue and we discovered that it's increasing by 17% between 2018 and 2019 and 19% between 2019 and 2020. Now let's go to the appendix shortly. Let me show you what we are talking about. So this is the appendices section. So appendix one, this is a trend analysis. Now this is a what? Is a trend analysis. So you can have it there. You can have it. You can say something like, oh, trend analysis, because this is a what? Is a trend analysis. Because what is a trend analysis? A trend analysis is a financial statement analysis technique, actually, that is used to analyze the trend of the financial statement line items in of a company. What has been happening? How has the years been? And I told you in the previous class that trend analysis can only be done if you have more than one financial statement here. You cannot tell me you want to do a trend analysis for just 2019. It's not possible. Trend is what? You're looking at the trend of things. Okay, what is the pattern of things? So in this case, now we have 3 years. So we can definitely do a trend analysis with 3 years, right? So the first thing you do is that you have your 2017, your 2018, and your 2019. So you look for the change. The change. So this can be very, very confusing. So I have a pattern, right? So I have no and the new minus the old divided by the old. No, this is very, very funny because when I was in school, we used to learn this, and this was very, very confusing because if you put old and then you put new and then everything is just all messed up, you can get a very, very wrong answer, right? You can get a very, very wrong answer because now, if you are doing, for instance, now you're doing 77,623 minus 60,560. Now you'll be getting a negative figure, right? Because okay, let's even say 77 minus 90, that's 13. So you'll be getting minus 13, and you'll be getting, oh, the trend is negative. There's a negative, the trend of revenue is negative, which implies that the revenue has been reducing, right? If the revenue is negative, that means it has been reducing. That's what it implies. But look at it. In 2017, revenue was 77,000. In 2018, revenue was 90,000. So revenue has not been decreasing, revenue has been increasing. So you have to actually do it properly. Because if you don't do it properly, you will be getting a negative figure. Do you understand? So you actually have to. So the example or the song we used to sing then was that to get percentage change, you use no O. No O, no O, no O. You can actually look at that. So no O, no O, no O, no O. Like you understand? Because that's new minus old over old. So you have your new now. Your new now is 90,560. Your old is 77,623. This is what I'm looking at. This is what I'm analyzing here. Here, right? 77,623. And the difference between that's the the new minus the old is what? 12,937. Now, if we divide it by the old, what's the old here? The 2017, right? So if you divide it by 77,623, you'll be getting 17% approximately. 70% approximately. So this is the change. So how do we get this now? We got this by doing, okay, so we can have it here just for you to understand. So we are got it by doing B minus A, Abby, B minus A divided by A. B minus A divided by A. That was how we got the figure. B minus A divided by A. So that was how we got it. B minus A divided. So that's how you get your change. No O. No O. That is your new minus old over old. No O. Do you understand? So you do that as well. For 2019 too, your new, that's 106. Okay, let me increase this a bit. Yeah, 107. Okay, that's fine. 107,810 minus the old, which is now 2018, Abby, 90,560. We give you 17,250, right? We give you 17,250. And then you do what? After that, you divided by the old, which is what, your 90,570. So that's how you do your trend analysis. That's how you do your trend analysis. And you have to also be very, very careful, because any little mistake can give you a totally different answer. Any little mistake can give you a totally different answer. And then you'll be getting wrong figures. Do you understand? You're getting wrong figures. So it's very, very important for you to calm down and get this right. So you can see that the change increased, right? There was a 17% change in of for revenue, 90% change too for revenue. But the unfortunate thing is that cost of sales also increased by the same amount. As revenue was 90%, 17% here, it was also 1990. So now the gross profit, the potential increase now, because revenue is increasing, that implies that people are buying, right? So as people are buying, we're supposed to have a higher profit. But then the profits remain the same, because as revenue was increasing, cost of sale was also increasing by the same proportion. Do you understand? Cost of sale was also 17% and 19%. So the potential increase in the gross profit was eroded. Do you understand? So that's why we didn't have a very juicy profit here, because when revenue increased, we should have an increase in gross profit as well. But it was the same. So it was like remaining, so it just remained stable. But then we had overheads too, and then we had operating profit. And then in the appendix 2, we just did, because they asked us to comment on gross profit margin, Abi, what's the effect of this change. So that was why I actually carried out a little ratio analysis here on it. So let's go back to what we're doing. I just wanted to show you all those things so that you just see that, oh, these figures were not just brought up from somewhere, or I just thought, oh, I feel like, oh, like 70% is my 17 is my favorite number. Let me use 17. No, these figures were actually computed and interpreted. So when you understand what, now look at this now. I said what? Showing an upward trend. Because I understand that as revenue is increasing, that means what? There's an upward trend. That means it's good for the company. And apart from that, you must also give a reason. And the reason you will give comes from the explanations, right? It comes from the notes that were given, the information that was given in your report, in your question paper. And from the question paper, we're able to see that revenue, that agricultural sector is lucrative actually. And then even the poultry farming is good. Do you understand? The account revealed that DFFP achieved the highest revenue in poultry farming, which is highly lucrative, which is a highly lucrative aspect of agriculture in Nigeria and Africa as a whole. Now, all this now was gotten from where? From the question paper. So the question paper is not for decoration. Your pristine is not for decoration. The 20 pages are giving you is not for decoration. It's for you to extract needed information for interpretation. Basically, that's the summary. So after that, we did cost of sales, because they asked us to also look at costs, where we talked about it, and you saw that it was 17 and 19%. I think we have looked at this in the appendix 1, right? Which indicates that TFIB needs to put cost control measures in place to reduce costs and increase operating profit. Because if you are telling me that as the same proportion of your increase in revenue is the same proportion of your increase in costs, that means you are kind of breaking even in that sense. So the profit is just, do you understand? It's just remaining stable. It's just stable. Do you understand? Because you're just breaking even. And that's not the goal of every company. Goal of every company is to make profits. right? Is to go make profit. So they have to put cost control measures in place, because if care is not taken, what if the cost now overtakes and then supersedes the revenue? They'll start making a loss. So they're just within the line of making a loss. So they have to put cost control measures in place to reduce costs. It could be, oh, buy your products now in bulk. It could be anything. It could be anything. I know, cost of sales, anything. They can just put cost control measures in place, and cost reduction techniques. They can actually implement them to actually reduce the cost so as to increase profits. Now, talking about the overheads too were also increasing 17, 19%. Everything remains stable, right? So they also have to look into this as well. Same as your operating profit just increased a bit. Do you understand? I would say that the consequence of the proportionate increase in overhead and revenue is that operating profit margin remains stable at 5.7%. So it was just stable like that. You can look at this now. Let's go back to Appendix 2. Appendix 2, can you see 5.7%, 5.7%? So it just remains stable because what? The operating profit is supposed to increase. But it was not increasing because the cost has already wiped away all the potential benefits we could get from increase in revenue, right? So that was why the gross profit was just remaining just stable. And we're asked to also comment on the effect on the operating profits, right? So that's just it. So it's just it's just stable. Everything is just stable because of the proportionate increase in overheads and revenue. Like, as revenue was increasing, overhead was increasing. As revenue was increasing, cost of sale was increasing proportionately. So it's just not okay. The company needs to look at this as well. Then the bank overdraft, so we commented on it. We also saw that the bank overdraft was actually increasing. Yes, it was decreasing rather. It was decreasing because it was 6 million plus in 2017, but as at 2019, it was 1 million plus. It was 1 million plus. But then the companies, that means the company was actually settling their debt and plugging back profit, or putting profit back into the business, but they still need to do more. They still need to do more. They still need to wipe away all their bank overdraft. So we just discussed that a bit. And afterwards, you conclude on it. You summarize everything you have done and everything, and then you give recommendations. Please and please, your recommendation should be in bullet points. It should be in bullet points. You can give a lot of recommendations, but give it in bullet points. This is bullet points here. Do you understand? This is bullet points, not story. It should be in bullet points, please. Then, when you're done with the first requirement, jump into the second requirement, where we were asked to talk about assessment of contract, supply service, and the installation of the integrated meat processing plant. You can give a little introduction here, and you can do it heading by heading. You can do it paragraph by paragraph. I decided to do it heading by heading here. I started to do heading. So now, from the contract supply side, we're not really giving so many figures. So there was a lot of uncertainties about the contract. You understand? So the contract also revealed some unfavorable clauses that needs to be evaluated. The cost and revenue cannot be holistically computed, as not all expenses are accounted for. They didn't account for all the expenses, just some. So we can't actually compute all the cost and revenue holistically. And the mode of operation of the shop is highly questionable, especially the labeling of DFFPs, locally produced products as imported. So let's zoom in. Locally produced products as imported. Now, what this company, do you know what this company they are doing? Now, some of what they're doing is that they are producing in Nigeria. When they are finished producing in Nigeria, they will now put on the body made in India, made in China. That's unethical. And do not forget, we're asked to actually analyze these businesses, these contracts. I also talk about the ethical considerations. So this is very, very unethical. It's highly questionable. Repackaging of unsold goods for resale as fresh by DFFP is also questionable. Now, DFFP, on the other hand, our own clients, they are not even without sin in that sense. They're not also ethical. Because just as the shop is packaging in Nigeria and saying made in India, made in Ghana, made in US, made in England, made in wherever, DFFP too is packaging the unsold goods and selling it as fresh. They're telling people, oh, buy your fresh eggs here, buy your fresh meat here, meat that has lasted a month, meat, eggs that were made a week before or 2 weeks before. We are calling it fresh. So all these things are questionable. All these things are unethical, and it's one thing that you have to what professional skepticism is very, very important. It's very, very important in financial data analysis. I talked about it in my financial data analysis video. Please watch that video if you haven't. Professional skepticism and ethical, and you pointing out ethical considerations is very, very important. It's part of financial data analysis. It gives you a leverage. Please do that, but do that when like let's be also you understand aligned and all. Then after that, you can talk about the installation of the meat processing plant right? The installation of the meat processing plant was appraised using the net present value. The expected now let's go to the appendices so they can so we didn't really compute for this first contract because we're not really giving information, and that's why we said we cannot holistically compute it because we're not giving information. Please, if they give you information, you are required to calculate it. Like now, I did not say that when we did the installation of the meat processing plants because I cannot say it cannot be computed, we cannot determine it because they actually gave us information. So if every information that is given to you, please use it to the benefits. Please use it to the maximum. Use your information well. So please. So now let's look at the appendix 3. Now this is the proposed installation of the meat processing plant. So we are given expected revenue. We're going to get expected revenue because we are given estimated revenue and probability. So 20 million times 25% will give us 5 million. 25 million times. Okay, so we can have this. Let's have this. So we have, okay, let's say A. Okay, and we have B. So here we have A times B, right? Okay, B. A times B. So that's how I got this one. So 20. So how to get expected value from your performance management? You can actually remember this. So this times this will give us. So our total revenue was 27.75 million. So that's our total expected value. That's our expected value. That's our expected revenue, right? Then we can do our next present value. Then we have our costs, 100 million 1 year, been our working capital, and then we have our revenue, been now. So maybe you can just put expected there just to show that okay, it's not expected revenue. Expected revenue. Let's increase this bit. Okay, that's good. So we have it. I know we have 5 years. So instead of us to do year 1, year 2, year 3, like I said, we have 4 hours, but 4 hours can be like 40 minutes, my dear friend. So be smart. You can use annuity. Use the annuity formula here. Now, which is one. Okay, let's have it here. R. Let's bring this R up. So wait. Okay. Yes. Yes. That's good. Yes. So this is it. So we have 1 minus 1 plus r raised to power minus n all over r. So that's your annuity factor. So that's what I used and I got this figure. This annuity factor. And don't forget your discount factor formula 1 plus r raised to power minus n, which is also the same thing as 1 all over 1 plus r raised to power n, right? And annuity factor, this is your annuity factor for more than 1 year. So I just put it inside. I got my figure. I got it to be 92.96 million. Then we're giving scrap value. I know scrap value will occur at the end. That's year 5, right? And working capital. Now, working capital would be invested in year 1. That is the initial year. Now, now. This year 1 now. We can also call it, some people will call it now. Some people will call it now. Can be invested now. And also be recouped at the end of the year. So we can have something like working capital invested, right? Then working capital recouped. So it will be an outflow in year 1, that's the now, and it's also be an inflow at the end of the period. And sometimes they'll give you additional working capital as investment, but they didn't give us anything like that. They just give us working capital. So after all our computation, we arrived at a negative net present value. And this is what, so you have cash flow multiplied by your discount factor will give you what your present value. And your discount factor we're told that it was 15%, but we didn't use this formula for expected revenue because it's for more than 1 year. Instead, we use the annuity factor. The annuity formula was what we used, right? So after doing that, now you have your 7.04 million, which is negative. That we have a negative net present value. Our page 9 has dropped to the ground. All right, which is your negative net present value. So let's look at our page. No, our page numbering. I also have to number it. I want to just bring it up back. Okay, I think you should have aligned down. Yes. So you have your page 9. You must also number. And finally, you have your page 10. You have your page 10. You should number your pages, please. Number your pages, although it's pre-numbered, because there's mark for correctly numbered pages. If you check your examiner's comments, check it. Look at any pathfinder, any past question. You will see marks for correctly numbered pages. So please number your pages. So let's now go back to our body. So you can see that okay, the expected revenue was computed using the probabilities, and the revenue amounted to 27.75 million, appendix 3. So anybody that wants to know how do you get it, they'll know you're linking it, right? The negative net present value of 7.04 million, appendix 3, indicates that the proposed project is not viable and DFFP should not undertake it. However, no conclusion has been reached on this because the reliability of the probabilities that were used to determine the expected revenue is questionable, and the viability of the project depends on the success of the contract from project shop, from the shop. Because we were told in the question paper, we're told that the project, the installation of the integrated meat processing plant, is as a result of the contracts from the shop. So the contract from the shop actually depends. It's actually the success of the installation meat processing plant depends on the contract from the shop. Because if the shop gives us plenty contracts, that means what, we'll have more revenue, right? And if the shop says they don't want to have anything to do with us again, then the installation of the meat processing plant may actually be useless. You understand? Because that's like the major reason why, that's the motivation behind it. So the success of the installation of the meat processing plant depends on the success of the contract from the shop. So make sure you state it there. That's like good use of information that was given. That shows that you actually read the question that was given. So that's very, very important, please. And afterwards, you conclude, you give your recommendations as well in bullet points. In bullet points. And then you have your appendices. I think we have looked at the appendix already, and that's all you have, and that's the end of your report. If you have other pages that you don't have, like for instance, let's say after having this page 10, okay, I have like empty page I did not use or something, and I don't just want to leave it there, I can just write maybe just PTO or something. You can just leave it, or you don't necessarily need to write anything. This is just your report end at page 10 or whatever. Do you understand? So that's how it will be. So in summary, the report, your case study report, you should start with. So let me go back again so that you can see it fully and wholesome. So the first thing is your cover page. After your cover page, which is your page 1, you move to your executive summary, which is your page 2 and page 3. The executive summary should not be more than 2 pages. Then after that, you can have an introduction if you want, or you can just jump into your what? Into your analysis. Go to requirement 1, talk about it, address it, give recommendations and conclusions. Go to your requirements 2, talk about it, give recommendations and conclusions as well. And then if you have strategic analysis, can also do it after you do your requirement 2, you can have strategic analysis. Or as the case may be, as the requirement comes, because sometimes they'll tell you use analyze the financial statement using performance scorecard. Now, for instance, that means like they're telling you to do it as a requirement 1. So as the case may be, as your need for model may come, just do it that way, right? So that's just what's important. And then you have your appendices, and then you are good to go. I hope you enjoy this class as much as I loved creating it. So it was really fun talking to you. I'm really happy like I was able to show you a full video because I just had to teach you basics, and here we are today. So we'll be doing more of practical class. We'll be doing more of practical class. I'll be showing you we're treating more past questions. So please, if you have not subscribed, please do that now. Please subscribe. Please give my video a thumbs up. Please share this video with everyone and anyone you know. Comment on it. Turn on the notification bell so you get updates of new videos. And comment. Ask questions. Tell me videos you'd like me to create. And I'll see you in my next class. Bye.